Now, CFC Stanbic, which is the holding company of CFC Stanbic Bank and CFC Stanbic Financial Services, has reported a 36.5% growth in pre-tax profits to 1.78 billion for the first half of the year. To give us more details, we are joined by the bank's CFO, Edwin Mucai. Welcome on board, Edwin.
Thank you very much.
Yeah, we'll focus more on the banking sector, which is the CFC Stanbic Bank, because it controls about over 90% of the group's profit and tangible assets. Now, to start us off, let's look at the interest income, which was up 78% year on year. That's pretty impressive. And it climbed to 6.3 billion, despite the tough economic environment for the first half of the year. Just bring us, just give us an update on exactly what contributed to this growth.
Yeah, I think it's actually more correct to look at the financial performance of the bank from a net interest income perspective. That's primarily because the cost of funding the loans is actually what we pay away to depositors as an intermediary. And if I compare June 2012 to June 2011, the growth there has actually been modest, about 16%. And that's primarily because you will see that our cost of funding the balance sheet through interest expense has gone up significantly because of some of the liquidity challenge the market witnessed towards sometimes the back end of last year, which persisted through to half year 21. So net interest income is up 16%, and that's largely driven by the balance sheet growth year on year.
Another element which we should also talk about is the cost income ratio.
Yeah.
And we've seen the banking sector currently has an average of about over 50%.
Yeah.
Yours is slightly higher at around 60%. Just tell us what exactly are you doing so that you can bring it down.
Absolutely. I think the long-term target for this bank is 55%. However, I think it's important to reflect on where we've come from. At the time of the merger, this bank had about 5 branches. CFC had about 6 branches. We've now built 22 branches, including South Sudan. That comes at huge cost. We've invested in infrastructure. That is a new core banking system, a new risk management system for our global markets business. And when you take that into account, we are now starting to see the benefits of that investment through higher incomes in the business, which is helping reduce the cost-income ratio. And more specifically, I think some of the cost elements include that continuing investment in South Sudan. So this year's numbers include some of the costs we've incurred to bring the South Sudan operation, to put a South Sudan operation on the ground.
You just mentioned Southern Sudan, which actually preempted my question. And we've seen a couple of Kenyan banks looking at regional expansion, and of course now CFC in June moved to Southern Sudan. What are the prospects for this market?
Actually, we opened the branch in April 2012. We've been there for about now just over 3 months. We've had actually a very good start to that operation, and we actually expect it to contribute to profit this year. So we're very excited about South Sudan. People will probably not know this, but we've banked the government of South Sudan for well over 5 years. So our relationship there is strong. And the business that I refer to is actually the new business, i.e. the incremental business from South Sudan, which has performed better than we expected.
Edwin, tell us about the plans by the bank to raise additional capital through a rights issue. It is expected that you'll be coming to the NSC pretty soon to fund your growth strategy. Just update us on this.
Yeah, I think we'd expect to be making an announcement before the end of this month in terms of the amount we're about to raise, how much we're going to price it at. We've actually made it no secret that the bank has expansion opportunities. So we'd like to grow the bank, better in terms of loans and advances. That requires capital. We'd like to build our deposit base and supporting some of the expansion in South Sudan. That's what we plan to use the capital for. But the announcement on when we will launch is likely to be made in the next few weeks.
And the amount that the bank is going to raise, do you know the expectations?
Unfortunately, I'm not at liberty to disclose that because this is a regulated process. So as and when we're able to talk about it, which will actually be pretty soon, we'll be able to come to you with all the information, including those who wish to participate, how they can do that.
Tell us about your projections for the second half of the year, as well as the areas you'll be focusing on, to consolidate your growth.
Yeah, I mean, the first half has been reasonably tough for banks. You will see that loan growth is actually pretty muted. I think some of that is not surprising given the high interest regime that the country has experienced. We expect to see that coming down as some of the correction we've seen in June and early July through the central bank benchmark rate. And that would bring a number of borrowers onto the books. So we expect to see some loan growth. A lot of the revenue for our business has been made through our global markets business. We don't expect that momentum to continue. So we expect to actually start growing the franchise and we see a lot of opportunity there.
Mm-hmm. Very briefly, you just mentioned about the loan growth and you've seen the non-performing loan ratio. It rose just marginally by to 2.1% in the second half of 2012 from 1.1% in the first quarter of 2012. Just help us understand what exactly transpired.
I can give you some context there. I think those who probably don't know our business very well, we actually lent to a number of number of large corporates, and whenever one of those large corporates has an issue which makes us conservatively provide, you will see lumpy credit provisions being processed in the books. We had one name in our corporate book requiring such a provision. We actually done it prudently and would expect actually the name to resolve by the end of the year. But that's really it. I think we continue to run the bank very prudently from a credit risk perspective. And I would not be surprised that some of our provisioning is probably one of the highest in the market.